The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. You know, I love this. It's just when you're looking at news, listening and looking at news, I always have to chuckle because in the background, you never know. I spoke about this once before. I remember that. You never know what's going on. You never know how the delivery of a video just got there like exactly on time, and then everything's quiet and calm and say, moving on to, and then they show the next picture. Well, that's what happened here. We, Too Close for Comfort. That was the name of the song that was playing earlier during the break from our engineer, Al, and Fly by the Seat of Your Pants. We had to switch from one system to the other, but we got it there right on time. If I never said a thing, you would never have known about it. So we got wonderful engineers here in TFNN. And, of course, you got to do things very quickly in this business because you want smoothness. You cannot have gaps of silence. You cannot have slips of the tongue that are not quickly remediated or whatever it is. So we're on. The Dow's up 98 at 16,429. The E-minis did not make an all-time high today. They went to 1876.75. All-time high is 1880.50. But you know what? The S&P, SPX.X, guess what? It went to 1883.97. The previous high was on the 7th of March at 1883.57. So it's 40 cents higher. But it is an all-time high. But it is leg E up in the 120-minute chart of the S&P. If you look, this is a little unusual, but a number of people are now looking at the 300 minutes because we've got one fantastic Denner who's done brilliantly with these one or two position trades in the NQM E-mini NASDAQ 100 June contract in this particular instance. And it went to the D, the requisite D in the Chapman wave methodology. And what happened? It hit 3712.75, missed the previous high of 3755.25, but it has pulled back dramatically in where? Leg D. Those Ds are amazing. But more importantly, when you're looking at the various indexes, you say to yourself, and this is what I stressed last night in the webinar that we had on the MACD and the slow stochastic. You know, there's still time if you want to sign up. It's archived. I was very satisfied because I got through in a very short space of time, 40 minutes, I got through everything I wanted to do. No, I shouldn't say everything. I should say everything that I wanted to do in the webinar. There is still a lot to be able that I could spend another hour on the same thing, discussing the finesse and the intricacies. But this really gave the core, the absolute core of my interpretation of what the MACD and the slow stochastic does. And even more important than that, in the webinar, I was discussing afterwards different stocks, different sectors, some that are doing very poorly. This is a rotational correction. How can the Dow be up 103 at 16,435, 120 points off the 16,588 all-time high December the 31st? How could, after such a spectacular 30-something% gain in many of the indexes last year, could the Dow stall and not make a new high on this 21st day of March, January, February, almost 3 months? And you remember there was 3 months between the high of January the 14th of 2000, and then the NASDAQ and the S&P made their high in March. Now there's no correlation here. What? It is so remote. It is so distant. The correlation between that time period I'm not talking about prices. I'm talking about the emotions of the time period where between 9:15 and 9:30 in the morning, before the market really opened, fortunes were made. I should say also lost because people kept shorting, but fortunes were made in those 15 minutes as some of those stocks moved up 15, 20, 35, 40 points. So what is really important about this? What is important about this is that because of the rotation that we're looking at, you have got, look at this, you won't believe it. You know, we've been shorting the IBB, the NASDAQ biotech sector. Oh, I didn't mean to do that. Give me 1 second. There, now I'm ready for it. Well, that IBB, I can't believe it, is down. It hit 246 this morning. It was at 275 just a couple of months ago. No, not even a couple of months ago. Back on February the 25th. Wait a minute. That's less than a month ago. And now it has hit 246 in leg D to the downside and trading right now 250. And this is remarkable. Most importantly, what I'm looking at here is I showed the 120-minute chart that it kept making these H patterns, and once again it's done that H pattern. And what I discussed last night in the webinar is the speed with which the stochastic pulls back under 80% or doesn't pull back under 80% is absolutely a key ingredient. And yet at the same time, you've got the semiconductor index yesterday soaring. I haven't looked at it today. Today's up again, and I've got this as leg E in the daily. Could have recycled, but it's leg D in the weekly and leg E in the monthly. Very good action, and the XLF is up. Was up. Yep, it's up again today. But that's not the point. The point is within portfolios, you can be short and you can be long. This is really for a technician, for someone who really understands how it's possible to be able to use the long side and the short side in a market like this to your best advantage. This is extraordinary, and it's not only extraordinary for a very simple reason that is called, as I call it, a rotational correction. It means that it isn't a broad brush, that you cannot go short everything or all the sectors at once. Everything's separate. We are very fortunate in my opening call. I really hope that my new subscribers were able to benefit by going long a particular position we had this morning. We bought it on a dip, and it is up 2.5%. Actually, for us, it's up even more because we bought it even lower than that. And that's the way actually, as a stock I'm going to talk about now, because I want you to mention that in this, why does that keep happening there? In this particular market, you've got beaten down United States Steel Corporation. Just look at that chart. Look at that monthly chart. That is just horrible. Had 196 round number high back in 2008. It pulled back a little bit. You know, sometimes these things happen. Down to $15.80, the most recent low. We were very lucky. We got it just 3 days ago at 25.25, and now it's pushed to 27. The high today is 27.16, trading at 27.10. But that's not the point. The point that we got it is not really the point of what I'm trying to emphasize here. I'm trying to emphasize that there are some stocks that just, it's like they were sitting there, and in this particular instance, I've drawn the pattern. It made this H, lowercase h, made a higher right side low as the technicals were soaring. It's like you put the burner on with a kettle and you never knew it was even on. You forgot about it. You went back and did your work, and then suddenly you heard the kettle's, everything's working. It's boiling. And now it's leg D. That makes me a little nervous. But I said to my subscribers that I think we could test the 27.31 previous high of importance. And that was on the double top 27.31 on the 14th of Feb and 27.30 31 high on the 18th. And that's all I really expected out of it. I don't know if it's going to go high. It looks like it should, but should is not good. We'll see. But all I'm saying is that this is a really important moment in the markets. Don't be fooled. Put your stops in if you have short positions and they're not working. Just get out. Why? Because some of these long positions, not only are they working, but they're on fire. And I rarely say that, but they are moving in a position. They almost look like biotechs right now, some of these stocks, the way they're going. But not the biotechs of today, the biotechs of yesterday. Okay, so I'd like to just run the numbers by you, and I'll tell you what we've got here. We've got Dow's up 112 at 16,444. The S&P is up 12 at 1880. The comp index is down 11 at 4307. Is this a mixed market? Is this a select market? Is this a rotational market or what? You've got gold. Gold right now is up 6 at 1336. Silver is down a tad, down 5 cents at 20.37. You've got high-grade copper still stuck in the 2.90 area, 2.97. Dollar is down 10 cents at 80.03. Crude oil is up at 100. And most importantly, we've got bonds up 10-30 seconds at 132 and 12-30 seconds. I don't think I've left out too many things. I questioned in the den, what about the Dow Qs and the IWM 300-minute? I haven't done work on those, but I have done work on the Qs and the 120-minute chart. Here it is. It's gone to a leg C, and it failed in an arch formation. It's made basically a peak C1, C2 top. Actually, it's the C1, C2, C3. Look, C1. I'll show you in a minute. C1, C2, C. Come on. C1, C2, and there's C3. And I'll blow it up so that you can see exactly what I'm doing here. C3. Oh, type the right thing. I guess I'm a little tired from last night. I still had to do my opening call, all that work for the opening call, which, of course, was really worth it. I enjoy that. So there's B. There's C. There's C1, C2, and C3. Oh, wait a minute. 90.66. 90.66, exactly. Double top. Now you're pulling back in the QQQ series. Sorry. Pro Power Shares, QQQ Trust series. And the IWM has gone to leg B, leg C. And let me see if we've got, that's 119.88, and today's high is 119.87, but it's still looking quite good. So, yeah, I think we should make a leg D in the 120-minute chart. Then you've got to be a little bit careful. What did I miss there? QQQ, Dow, and IWM. I've shown you the Dow chart. Did I show you the Dow chart? indeed. And if this one's updated, leg C in the Dow. Wow, that is strong. Good chance we might even get to an all-time high by next week. All right.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman, Tiger Technicians. In the meantime, as we're speaking, the Dow's now up 117. S&P's only up 897. Now, this is very interesting. Remember, the Dow, I like to see the 500 be more powerful than the Dow. This is options expiration. There's a lot of squeezing. There's a lot of squeezing going on. Most importantly, what we're looking at is the Dow's up 0.7%, the S&P's only up 0.49%, and the Nasdaq is down. So this is a real mixed market. Keep thinking mixed market. Keep thinking bifurcated market. Keep thinking that this is a rotational market. If you are on the side of stocks that are doing well, some of the ones that were very big laggers are actually doing extremely well. And I don't know why. I mean, for instance, I'm now looking at the screen and I'm looking at two long positions being up 3.78 and 3.79 each today. I mean, come on, how often does that happen in a market where you've got such a mixed rotational work? And now, most importantly, I need to do a couple of things here. First of all, I really want to thank the team at TFNN, starting with Mike Comey, right all the way through. Just fabulous group. Leanna, Al, Steve, Tommy. They did wonders in trying to put this whole thing together for me to be able to so smoothly be able to do my webinar last night. We have fabulous technology here. It just makes it so easy for those of us who are guest hosts to be able to do this sort of thing. I know that Andy Hector's got one coming up next week. We love doing these things. The whole educational aspect is really important. And to have a team like this, I don't even know what to say. It's just, it makes it really easy. You just step up to the plate. You do your own homework. You do your job. Everybody else is doing all the engineering, the organizing. Fabulous. Great team. Bravo, TFNN. And I really do thank you for that. Now, I had a question in the den about GMCR, which is Green Mountain Coffee Roasters, and then they keep changing their name. What the heck are they? Oh, now they're Keurig Green Mountain Inc. Hey, changing the name is not going to help. I think it's got a little bit of a problem here. The last peak D in the weekly chart and the last peak D in the monthly chart is a fabulous move, but it needs time to digest after the peak G that was made in the daily chart. And that was at 124.42 on the 20th of February. Next day was 124.20. That's what I call a two-bar reversal. For those of you who have just subscribed to my, got a trial subscription to my two-bar reversal, who have subscribed to my newsletter, I will show you a number of techniques as we move along. And that's what I call a two-bar reversal. I'll explain it in due course. But unless Green Mountain is able by I'd say Wednesday of next week, midweek, able to clear 120, I suspect that it's going to make an H pattern and digest these gains. So I'm a little... Stochastics at 83%, but the MACD is not showing a wide beta between the fast-moving average and the slow-moving average. The weekly chart had a soaring move up in the MACD. The stochastic saying, hey, you're going to have to prove yourself. So all I'm saying is that if you're long, stay long. I'd make a stop of about 108. It's at 130.22. But if you have in a position, I'm not sure yet if I'd short, but on Monday, if it hasn't gone above 117.45, I suspect it could be coming down. If it takes out 110, it'll probably retest the 103.64 level. That was back on the 10th of March. Now, here's something else that's quite important. I just need to quickly check here to see if any... oops, oh, now I've really messed things up. Technology was doing so nicely, and then out of the blue, what happens? I didn't do very nicely. Now I've lost you, Al. I'm sorry. I don't know if we've got anyone waiting in the wings there. That's really what I wanted to check up on. Oh, there it is. Oh, yep. Just as well I checked it out. Tim in Denver. Hi, Tim. How are you?
Hey, Basil. Thanks for taking my call.
My pleasure.
Appreciate your analysis and all that. You're good at what you do. Hey, can you look at gold? What do you think of gold? I'm kind of watching the bear and the bull ETFs of the gold.
Well, my first question to you is: do you have any position right now that we can then we can deal with it? Otherwise, I'm talking about it in a different way completely. Do you have a position?
Actually, right now I don't.
Okay.
I was short, and I had dust, and I covered my position.
Wow, that's good. Okay. Bravo, first of all, because covering your position is a good thing to do. I would be considering re-entering that position. But give me a moment. I want to talk a little bit about the patterns that we're looking at and why the next two bars are going to be really important if certain parameters are taken out, either up or down in gold. We'll be looking at the gold contract, folks. We'll be right back. Basil Chapman, Tiger Technicians Hour. We're on with Tim in Denver looking at gold.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Just had a question which actually is pertinent to what we're looking at right now. A question of the den from Rob, and he wants you to know in the continuous contract, he has a peak A, B, C in the 10-minute chart, and then it's just a C, and it failed, and that's exactly, this is a failure. It's very unusual to have a failure at peak C, but in the Chapman wave, but if it does that, it's a very negative thing. It means you can go back and give back a huge amount of ground, actually sometimes going all the way back to the low. So now what we're looking at is that Tim doesn't have any position. He had great, congratulations, he had a good short position, but this is my recommendation for now. I'm going to just quickly do the dollar, because the dollar, if the dollar keeps rallying, it's actually the other way around. If the, whoops, I didn't need to do that. Let me just go back to this one here. Call that.
I kind of wished I would have got back into dust this morning, in the pre-market. But
so are you saying you did or you wanted to?
No, I missed it. I didn't get in. I wanted to get down into 19 something is what I was looking for.
Oh, so you just missed it actually by maybe 20 cents or something, huh? Well, you know what? Dust is, let's just go through this. First of all, the in both the contract itself, this is the June contract as well as the continuous contract, that was a peak A, B, C minus. But if you're underneath the previous peak, that's where it could fail. And in this case, the previous peak is way back. This is really just a retracement mode. And I needed to go back in the 10-minute chart just to say that's an A, B, C D, E, perfect. A, B, C, D, E, F, perfect. A, B, C, not perfect because it failed at a C, and that's very unusual, but it is a commodity, and commodities sometimes do a little bit differently to stocks in that there are other influences, but that's the way it is. So what I'm looking at here in dust, which is the direction daily gold miners 3 times, this is 300% long, short the price of gold. I like this, actually. I think that... I don't want to say that it's peak A because in the inverse ETFs or ETNs, you got to be careful because they are not the root. The root is, in fact, the gold, not the contract, but the gold price itself. So this is like 3 removed. Okay, now let's just go through this again. I'm going to go back to the gold contract, GCM 14, and this is the daily contract. Oh, I just did it again. Let me go. There, GCM 14. Now, what's really important about this particular contract is that there's a pattern that I call the Eiffel Tower. There's another pattern. This is the daily. If anybody's looking at the Tiger TV, I'm going to open this up nice and wide. This is the notation of the Chapman wave within the context of the gold June contract. And there was a moment where it started a brand new buy mode back around about the end of January, and it went peak A, B, held the 9-period moving average, went to a D, and then it went to an E, and an F. But within that, I typed in leg, I typed in body, I typed in neck, I typed in head, I typed in Eiffel Tower A pattern, and that implies that it can come straight back down. And if it takes out 1355, that was the high of the body itself back at on the 3rd of March. It could go back and test the bottom of what I call the body, which is 1319.90. Well, the low on the 20th was 1321, round number low, and now it's bounced. I suspect at best it's going to go to 1348, but there's a really good chance, based on the MACD and the slow stochastic, that it's going to retest the 1321 low and probably take it out. So now what would you do? I'm not sure I'd be playing with the 200%, 300% in this particular. I'd rather be looking at the 200% just because of risk reward. And what is the volume? I've had this before, and I loved it, but I held it for quite a while, months. It's got it doesn't have very heavy volume, but it has a pretty good volume.
What are you looking at right now?
I'm looking at the DB Gold Double Short ETN, the DZZ. And it's instead of 300%, it's 200%, does the same thing. And the only reason why I'm looking at it is this is mostly for listeners, because you've traded these before. You understand how you can have the price of gold do one thing, but the ETN could possibly at times do something else because it gets readjusted and a whole bunch of things happen to it. So I'm just mentioning it now that maybe the safer bet for some people would be the DZZ. Here's what I'm thinking. Okay, now let's get to the nitty-gritties, because I had a number of emails, questions about this. In the gold contract itself, the way I'm looking at it, I suspect it's got A, B, and a C in the 120-minute chart as well. It doesn't really need to get to D. It could get to D, but it doesn't have to, because this is just a retracement. This is just a bounce. The 200-period moving average is at 1344. I'm going to make a recommendation. You see, Sunday night is going to be very important for gold because it's the first time. Today's the first bounce that it's had in the 3 sessions. 4 sessions that it came tumbling down. So Sunday's going to be important, and I'll tell you why. Because if Sunday it suddenly spikes and it takes out today's high of 1343, then I think you've got a chance at that 1344 level for a peak D. So to me, that's too much of a risk in a 300%, especially the dust. Can you trade the dust on Sunday night?
No, I don't.
I think you have to wait for market hours. I'm not sure about that.
You can do it pre-market. I can do it pre-market Monday.
Okay. All right. So you can do it pre-market. That's what I need to know. I just couldn't remember offhand. I didn't want to give you bad advice. So I'm suggesting this, that if you Because I'm looking at gold going lower. Let's just make it simple. I'm looking at gold going lower. I'm going to recommend that you do a small position in dust, the DUST, realizing that in the small position, let me get rid of this one here. In the small position, the stop can be a little bit bigger. It allows you that flexibility. But the most important thing is if on Sunday night, gold is starting to pull back, and if there is a hint that dust is going to go above 21.23, is trading at 20.80 right now. That was the peak that it made that was yesterday at 11.22 last night. If it can go above that, I think that wouldn't be last night. That would have been during the, I'm not sure. 4 o'clock at the close yesterday. So what I'd be looking at is that if dust goes over the high of 21.23, there's a real good chance that it can push above the 21.98 level, and that would be A, B, C, D, E. That would be leg F, but it might even be starting a brand new move to the upside. Yeah, that's my recommendation. A small position. If you're able to control it today, if later in the day there's suddenly a push higher in gold, then I would say don't hold it overnight. If it takes out 20.03 today, that's a 55% stop on the day. I don't know if that suits you, but that's the way I'm looking at it. Why? I think that by Tuesday, gold could start to head down again, and that the dollar index is holding okay. But I think the dollar has a chance to try to retest the high of 80.35, and maybe leg C will be at 80.36. You saw at leg C. I actually don't see the dollar right now unless it's able to break substantially higher. And by that I mean unless it can take out 80.90. I really would like to see the dollar in the 81s by Monday or Tuesday. If it does that, that's excellent action. But if it fails to do that, then my impression is that the Fed constantly, for years now, has got whack-a-mole. Every time the dollar moves up, bang, 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 they hit it down. Every time bonds move down, they go bang, 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 and they want those bonds to go up. They want the yields to stay. That's why bonds are just stuck in a trading range for this particular moment. Well, not for this moment, for quite a while it's been like that. So that's what I feel about the dollar. This is the first opportunity that the dollar actually has to start breaking all the tremendous resistance in the 81 to 81.50 area of the continuous contract. We'll see what happens. So that's my recommendation, only because I think gold, the gold contract in the weekly chart is saying there's a good chance that it needs to test the 1317 9-period exponential moving average. And that's when I will start maybe to look at the gold stocks, and I want to start looking at a potential move for a leg C up in gold, and then I think the dollar might pull back. That's my thinking. I need to look at the technicals to see if the stochastic still holds very good in the weekly chart at 88%. If it goes to 85 or 83, that's okay. But so far it's holding well. So I hope that helps you.
It. Oh, yeah, very much, very much.
Thank you very much for calling, Tim. And I wanted to go a little more comprehensive into that, folks, because I did get a couple of emails asking that very question, what about gold? That's my impression now. Not only that, there's something else. You see, there's a potential. Where's Rick from British Columbia? There's a potential for a head and shoulders pattern here that if gold manages to move to 1357 and then for whatever reason just cannot break above it, and then pulls back again, which would be in a few weeks' time, then there's that head and shoulders pattern, because if at that point it breaks the 1310 to 1300 major support, it's going to go a lot lower. So those are the parameters, because if it goes above 1365 in April, that's going to be very good action. So needed to go through that. Terry says, when in doubt, trash the king. I've never called the dollar king dollar. I just don't see king. I see, let's see, abdicated king, maybe, like, what was his name? Not George or whatever, Edward, whatever his name was, the king from England in the 1930s and 40s. Yep, it's an abdicated king. So the dollar index, I just wanted to show it right now. Look at that. the H pattern, in my CD introducing the Chapman methodology, I talk about the H pattern becoming a repetitive M pattern until one of the parameters eventually breaks on the border. Well, the 200-period moving average is at 86.76 on the monthly chart of the continuous contract of the dollar. And this is one of those continuous contracts that I believe in very strongly, because it is just a tad away from the actual price. Look, the actual price right now, I can't show it, is at 80.27, and the continuous contract is DX. The continuous is 80.265. So I really like this. Hey, what happened to my notation on the monthly chart? Oh my. It's at. This is dollar DX. My God, that was scary. There it is. 80.11. Sorry, the continuous contract, 80, so it's 17 cents, 16 cents away. Not a big deal. All right. So, a couple of things that I had questions about from the webinar. I will deal with it in my opening call itself. And I'm not sure. So, thank you, Tim. I'm not sure if Tim's still there, but thank you, Tim. Tim, for calling in. I do appreciate your call, and good luck with the gold trade. Now, what I want you to say is in the dollar. That's right. I wanted to spend just a moment here talking only about the dollar in relation to the commodities. You see, the dollar had a big spike, a really big, one of its biggest spikes since back in January, where it had a very nice spike and then failed. This will fail if you take out yesterday's low of 79.92. Then you're going to test 79.86. 79.82, then 79.92. Then you will test the 79.86 9-period moving average. Break under that. That's a failure pattern. So the dollar needs very quickly to go above 80.35, number one. Number two, in the context of copper is trying to establish some kind of a base. So we've been watch this real closely. In fact, it's got inverted. It's either going to be a reversal pattern or an inverted stork leg. Stork is flying upside down right there. So we've got to watch that. A takeout of the 2.877 low is a real problem. I want you to look at the banks. The XLF is moving up higher again today. It's at 22.62. This is one of the reasons why I'm calling this a rotation and a correction, and so far not a bear market, because a bear market would in fact have bad news on the volatility index, which is now at 13.83, holding quite well. I have to tell you, I'm looking at this volatility index and I'm saying, I know at the end of the day sometimes they smack it down. I also know that the price that you're looking at is sometimes reflected more of emotion than on a mathematical formula. But at this particular point, the VIX is saying not all of us believe what's going on. And one of the reasons, I think, is because you got the NASDAQ. The comp index is still down. It's down just a little bit, down 37 cents. But it is down. That's a conflict. So looking at the XLF, I don't know if this is a brand new move in the daily. I'm suspecting that I will know by Monday or Tuesday a lot more. Looking at Bank of America, great action yesterday, followed through today, and then it pulled back. See, these are the things that I'm looking at really closely. Is this a leg F in the daily chart? Is this a leg E in the, a leg F? No, it's actually leg E. A leg E in the weekly, leg G/C in the monthly. I'll do a little bit of work on this before we get back. And don't forget, today you got Nico and...
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. And don't forget my services, The Opening Call. That is a daily newsletter, very comprehensive newsletter. It gives the parameters of what we're watching. Every day I show just right here. This is not the explanation. This is just the chart itself. I show the VIX 120-minute chart, made a peak E top of 18.22, pulls back to 13.89. Today goes low to 13.77, trading right now at 13.88. I show the resistance, the arch formation in the 120-minute chart in this particular case. I even explain that you can use patterns that repeat over and over. Look at the oval pattern. Let me just pull this out here, and I'll show you something very interesting. Look at that. That oval pattern was repeated from that area back in January when the Dow fell sharply and the VIX ran up. Then you made another oval pattern, and now there's a potential for another oval pattern coming up after we possibly make a peak D in the Dow, maybe today or Monday. We'll see. But it doesn't have to happen because it's underneath the previous. Oh, no. Yes, 16,505. Yeah, it's under the previous high. And you can fail under previous highs. That's the very important factor in retracement failure modes. And I explain this all every single day. I do have a signal that says that regardless of what happens and regardless of what the futures are showing on Sunday night or Monday morning, that there should be a sudden rug pull on Monday. Now, this happens periodically when on options, only on options expiration day, so I don't put as much weight as I normally do, but I'm going to say that I do have a signal that did flash, and because it flashed, I do have to explain it, and we'll see if on Monday morning, regardless of where the futures are, there's not a sudden pullback to negative in the Dow. That's the most important, it's the Dow. Now, I'm showing you Berkshire Hathaway, and Berkshire Hathaway BRK.B is Berkshire Hathaway B shares trading double topping at 125.91 in the 120-minute chart. That was the previous high. This high today is at 125.89, 3 cents away so far. And a nice spike up in the daily chart, which says if it goes to a high above 125.91 by 1 penny, that's leg C, and it should still go higher to a D in the daily. I'm a little concerned. I've spent so much time on this, I don't really know the exact, with confirmation, the exact letter in the weekly chart. At this particular point, I'm calling it leg E. But if this is a brand new A in Berkshire Hathaway in the weekly chart, this market, because Berkshire Buffett is in everything, insurance, home building, whatever it is, you name it, he's there with businesses, not the stocks, the businesses. That would be really powerful. Insurance, just the works. But it's leg E up in the monthly chart. So I'm watching Berkshire. I've been watching it for a little while. We don't have a position. Just been following it. There's an instant restart that I have to call it an instant restart in the Chapman wave. That makes this an E. But if that wasn't an instant restart, it was a peak G. And now we're in a brand new leg A. Believe me, something's going to happen. That's extraordinary. Maybe that's why Newton has become the restaurant capital of the state. I can't believe it. 119 restaurants in Newton, a population of 85,000, $43 for a ribeye. I see advertised there. I don't know what's going on. So maybe this is that period. Look at Tiffany. We had a call yesterday. I said, take it a little bit off, but keep your call because you just don't know how it's going to act. Well, what happened is it did everything. It opens at 90.20 Tiffany, TIF. It spikes up to 93.85. It plunges to 89.34, and now it's trading at 92. Hey, stay tuned for the this is the health program with Nico and Paige and programming all the rest of the day. Check out my opening call service on TFNN. I think you'll enjoy it. And stay tuned, folks. Great program, as I say. And watch the Dow. Dow close over 16,460 would be really good. A close below 16,380 would be.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.